Okay, recording this video after close of trade Thursday, 10th of April 2014. Was not planning on doing a video today. We're getting on a plane tomorrow, so lots of personal admin to do today. But today was such an important day on the market. Huge down day, 40 plus points, 2% down, and we're breaking the lows of this kind of congestion zone, and I think we're going to travel further. So just want to kind of talk about that and go through some of my charts. First thing I want to just point out is seasonality wise, we're at a kind of a critical juncture. This is, I don't go in much for seasonality, but there are 3 or 4 times during the year where it does actually have really strong correlation with fundamentals, and we're coming up to tax time in the US, and so leading up to that and filing of taxes, there's usually weakness in equities as people are cashing out accounts and kind of raising funds in order to pay tax bills. And this is a little seasonality indicator that I'll do a fuller feature post on in the next week or so, just talking about some of the seasonality patterns that are worth following during the year. And this was a couple of days ago, this little seasonality indicator here. It shows you kind of broadly what to expect with some projections based on what's happened historically, based on all the kind of data that you can load into a chart. And so I think this is looking back 15 years or so, plus 15 years plus kind of historic data. And this was before we had yesterday's bounce and today's sell-off. And this was what this seasonality indicator was projecting for the next 2 or 3 days looking forward. And this is showing the weakness that kind of comes around this time, around this kind of 15th of April kind of time with tax time. So we've got some fundamental reasons why there would be kind of weakness in equities, and we're falling out of bed. We're falling out of a kind of congestion zone here. So we started this move a couple of days ago with this kind of distribution pattern that kind of finished off all those high volume churn bars that we had leading into this high, and we had some big kind of down days, and then yesterday we had a bounce back, and then today 2.1 million contracts traded, and we're breaking through the lows and closing below this kind of resistance becomes support over here. So that level that was end of trend previously is kind of a support area that we've been bouncing off 2 or 3 times, and now today we've kind of cracked through it. So this is important. And I said on the video a couple of days ago, when we bounced back on the 45-minute chart, that would be a critical level, and this is why I was talking about that. So we had the initial sell-off that we had a couple of days ago. We didn't get an exhaustion pattern. This was just bullish divergence, playing off this exhaustion pattern here. And then because that support level held, we bounced back, and what would be critical was what happened at this 45-minute bounce back level. Were we going to continue through there, show some strength, and this kind of we'd still get a little bit of continuation of the rally kind of going forward? But no, today 45-minute chart resistance kind of comes in, and we just immediately fall off against it. So we can see strength in the market when we get support levels immediately bounced off and a little bit of follow through and overshoot on resistance. So support holds, we overshoot resistance, support holds, we overshoot resistance, and then support holds, we don't overshoot resistance here. We just come to resistance and bounce back. So that is showing weakness. We're still in the congestion zone. We've got to go down and make support on the 45-minute chart, and then start dropping below that into trending moves on the 45-minute chart. But we've already done it on the 135-minute chart here. So we just cracked through that with the last few minutes of few hours of trade today. The 1835 level was kind of key, and then when we dropped through that, all of a sudden people realized that's not going to hold. That was the low from a couple of days ago, and now we're kind of cresting down. So we've got a few days till cyclical support comes in on the daily chart. You can see here that's kind of due at some point over the next few days, but we're coming out of this support level here, support resistance level here, so this is going to travel a little bit. And the worry is, if you're a bull and an equity, kind of long equity player, is that support level is not going to hold. We're going to crack through it into a big trending move on the daily chart. So I suppose I've been waiting for this for a super long time, and we're starting to see it kind of finally kind of capitulate and kind of come around. Just want to show you that on the other indices. This is the Dow. On the Dow chart is looking like resistance to support is being played out there. On the NASDAQ has been very weak. It was the strongest index leading into this kind of March rally, but now it's been the weakest index through this last couple of month and a half's kind of play. And now we're through support on the daily chart here, and the same thing is true on the Russell. So we're breaking into downtrends on the high beta indices. So the Russell and the NASDAQ are the high beta indices, as they move in bigger percentage moves, as opposed to the Dow, which is smaller percentage moves, in the S&P. So the high beta indices have already broken through support. So on these daily time frames, we got to go pull back to end of trend on the daily time frame. So that's going to travel some. And then here's the S&P 500, which was again a resistance level here after having exhaustion, bearish divergence and flush patterns kind of coming out here. So it's been a long time in the running, kind of working out the energy here, but now, trading is all about what happens at the support and resistance levels. Does the support or resistance levels hold and we bounce from there, or do we break down through them into the trend moves? The trend moves is where you make the big money, and it's catching those and being positioned in the right direction when those happen. And so we're doing that on daily charts for all of these indices. So on the high beta ones, we're breaking into downtrends through daily support levels, and so that means the moves are going to be a lot bigger and last a lot longer. So you can also see it happening. This is the congestion zone I was talking about on the trend line, better trend line. We had a breakout, false breakout through resistance. We had this little congestion pattern. So better trend line plots rising and falling trend lines. When you're between those trend lines, you're in congestion, waiting for the next trend break, either up or down. So once we have a false breakout above the falling trend line, so these red bars showing a potential breakout to the upside, but then we fall back into congestion here. So that was a false breakout, and that means we're going to test and probably go through the trend line on the other side of that congestion pattern, and that's exactly what we've done today. So we've fallen out of bed, basically. We're falling into a downtrend move below this kind of channel here, and you can see the same thing is kind of replicated with better X trend. So better X trend is now kind of flipping over. It's turned into a trailing downtrend with white trailing stops. So this is based on exhaustion buying and selling, putting these trailing stops based on exhaustion bars. This was the first move, kind of getting going. This rally back up I call under the lip. So a little bit of strength under the lip, and then we come back down again, and so the trailing stop has followed us down. So that's just showing we've exhausted the buyers at that point, and we've the professionals were using that kind of big volume, big range day in order to get out and get short, because we're cracking back down below the lows of that rally bar. We're kind of getting going, and you can see the same thing happening on all these charts. So NASDAQ has been the weakest. This has been falling off for a while. We had this little move under the lip. I mean, there've been three in succession here. So one under the lip, we kind of carry down. We have one here. We have a little bit of strength, but then we kind of continue down. This is the third one, a little bit of strength. We kind of continue down, breaking to almost new lows, kind of here. S&P, the Emini chart, same thing. Cracked into a downtrend under the lip, and bang, we've come back down again. And what's this? This is S&P 500 index, same thing. Little rally bar yesterday, and bang, under the lip. So this is continuing down. Okay, so just to refresh, the weekend we had, the crash warning indicator go off 2 weekends ago. So we got that in the background. So just kind of keep that in mind. All trends, it's not going to happen all at once. It's going to be up and down and up and down. But all I'm saying is, the major trend is going to be on the downside. So it's a question of kind of getting short on rallies and just being careful of support levels that might kind of give way. A chart that I kind of follow from time to time, just because it's psychologically, mob theory kind of type stuff important. Apple. Just show you the Apple chart here. So, Apple a couple of years ago topped out. This was, I think it was the iPhone 5 release, up at $700 here with a lovely pullback to end of trend sequence and a beautiful little Rambo pattern right at the highs there. I don't know if you remember when it hit $700, everybody was saying, is Apple going to go to 1,000? And that's the Rambo patterns, the little amateurs kind of getting wrong-footed. After flush patterns rolling over, bang, huge down move kind of going on here. So we bounced off this kind of 400 level, good value at $400, and it's come back to, I don't know, 570. I think 560, and we've been making a series of kind of weaker highs here. So on the daily chart, it went pullback, end of trend. Blue professional bar kind of does not get broken to the upside, kind of continues down. Next rally back in, blue professional bars kind of broken to the downside. This last one was the amateur up bar here, in this little sequence, little amateur sequence here. On the daily chart, we're about to break support on this. Psychologically, that level at I can hardly see that on my chart. It's just above $500. Let me get you that number. It's the low of the last couple of days, so about $520, 518. That's a really kind of important level. Starting cracking through there. Again, trend moves on daily charts which start to run and run. And on the weekly chart, it's pulled back to, end of trend kind of being made, and that pullback level starting to be broken here, and it's pulled back to, end of trend on the monthly chart, which could print a little bit, kind of late here. So it's happening under the lip. 700. We got to 570 or whatever the number was, kind of up here underneath here, and then we start breaking through the 520s and 500 back into the 400s. Psychologically, that's kind of an important number for a lot of people who are kind of long-term holding Apple and so on. So there's kind of some interesting charts kind of going on. But anyway, that's it. It's just about support and resistance levels, and they're kind of being broken on the daily charts. So that's what for me suggests that these moves are going to be longer, last kind of longer. Anyway, hope your trading's going well. Hope you caught some of today's trade.